What's up, everybody? So if you're like me, you just got through listening to the Disney Q2 2020 earnings call. Do you think it's a good time to get into Disney right now with everything going on? I'm going to talk a little bit about that coming up next. What's up, everybody? My name is Paul Zachary Shelton Jr., and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida, with clients all across the United States. If this is your first time viewing one of our videos, I ask that you please hit the subscribe button, ring the bell so that you can get an update each time we upload a new video about all things financial. Also, please like and share this video to help me spread the financial literacy of this globe. Before I get into Disney, I want to share something with you. I do have a free financial planning cheat sheet. And if you're interested in that, please send an email to investments@warwickshore.com. I'll have that email address in the description, and I'll send you over that free financial planning cheat sheet. So let's get right to it. Let's talk about Disney. So Disney released its quarterly earnings today. And as many people thought, it came out as pretty much as expected. I'm not going to dive into too much of the fundamentals because, just like you, I read all this stuff anyway. But let's just get some really, really good cue points that we can talk about that are really, really not based on the true core business or what has historically been the core business, and that's the recreation parks and the cruises. So we're going to strip all of that out for right now. I know all the parks are still closed. I believe as of May 11th, some of the parks in China, I believe, are going to start reopening with a scaled down capacity. And this is something that they talked about on the earnings call. There's going to be a process where people entering the park are going to be given a pre-dated ticket. So you're going to have to buy tickets in advance at a pre-dated ticket, receive that pre-dated ticket, be able to enter the park, but they're still going to have a social distancing process in place within the park when it comes to being in line, when it comes to concessions. To me, it sounds like it's just going to be controlled chaos, and I don't understand how the Disney experience is going to be truly lived in that type of atmosphere. Someone that lives in Orlando, Florida, like myself, that's used to going to Disney World on a regular basis, I understand how the business works, how convoluted it is, and how important it is for Disney to cram people in order for them to make the big bucks. That's not going to happen for the foreseeable future with none of the parks that they have around the globe. So we're not even going to talk about any potential park revenue as of right now. I want to skip all the way down and talk about something that was talked about on the call but not highlighted enough, in my opinion. And that has to do with their cable networks and the revenue from the cable networks. This has been a very, very good thing for Disney recently to broaden out their revenue stream and to go into other avenues other than just sports with ESPN. They broaden out with Freeform. They have the Disney Channel and a lot of other things in there that produces content on cable networks. But one thing that really happened and they saw a hit from, and this is something that is starting to change over the consumer preference and the taste of consumers across our economy and across the global economy, is they saw a reduction in advertising revenue. And that reduction in advertising revenue became because there was a lack of viewership across the cable networks. Many people are pulling the cord on cable and going directly to having Hulu, YouTube TV, or other things of that nature. So in a time, in a climate, in a situation where we're dealing with the coronavirus and the parks have no time frame of when they're going to reopen, as well as the cruise ships when they're going to be able to go out on the waters again, what kind of picture does this paint for Disney in the near-term future? Now, I know everyone loves Disney. Everyone loves the stock. Everyone likes to talk about how great of a company it is and the revenue that they generate and how well the stock has done historically. As of right now, as of today, as of trading, as I look at it, it's traded down, I think, to about $98 after the market close. So roughly where we are right now is about a little under or a little over one standard deviation below its 3-year trading mean on its stock price. I mean, it's significantly under its 52-week high, which is roughly $153. So with that being the case, we're down about 36%, 35% roughly on over the 52-week high. So I want to pose this question to everyone. With this being known and looking at this as a pure fundamental play for the short term, is Disney a good potential buy for right now? We have the country slowly reopening. Florida is slowly reopening, even though Disney has said that they don't have any plans to reopen its parks in the U.S. as of right now, but Florida is slowly reopening. What does that mean for Disney? What does that mean for the Disney experience if they're only going to reopen and have a scaled back experience? Is someone really going to pay thousands of dollars to bring their family from out of state to stand in significantly long lines and not have a Disney experience? I don't think so. So I want to get your opinion. Leave some comments below. Let me know if Disney is in your portfolio, what percentage of your portfolio it is, and if you're adding to your Disney position, or are you pulling away from your Disney position as it sinks lower into the 90s right now. As always, please hit the subscribe button. Please like this video. Please share this video. Help me grow the financial literacy of our globe. Thank you so much. Talk to you soon.